is looking at it from two vantage points. Bloomberg Intelligence senior semiconductor analyst Kujan Sobhani out there in our San Francisco bureau. Right here in studio, Robert Schiffman. He is Bloomberg Intelligence senior tech credit analyst. Kujan, let's start with you. Keep hearing on radio, TV, everywhere. This was actually a pretty strong quarter, an outlook for Nvidia. Why is everybody so concerned?
I don't think there's any fundamental concern. There was nothing negative we could find.
But
in
investors
the print.
are unhappy completely.
There is. I think it has a function of AI fatigue in the market. So if you look at the top 5-7 customers who are driving all this revenue, they all got punished because of raising higher capex spendings, right? So you can't have it both ways from an investor perspective. Like if they don't like the high capex spending, the company that's capturing a lot of that would also likely not get rewarded. Also, like you said, it's a $5 trillion company, right? A lot of this story has been digested and absorbed and analyzed. So there's also that wanting for a brand new catalyst factor, which I guess was not there from the earnings.
Robert Schiffman, come on in here because like Kunjan, you look at this from the credit perspective too. You look at Nvidia in the context of the other companies too, and obviously the customers as well. How do you view the earnings? What story did it tell to you?
Yeah, sometimes I feel like I'm living in a bizarro world.
Why?
This might have been the greatest print in the history of the stock market with the greatest guide. And we're in a market, at least an equity market right now, where nothing is good enough. A lot of people are long this name. It's $5 trillion equity market cap. Where do you find the next buyer? From a credits perspective, spreads are tighter this morning. It's not a huge float, but tighter. Nvidia got upgraded earlier this year, and I think they're going to be the next AAA rated name. So, what do my customers think? I think they think everything's fine. They're worrying about other names. Nvidia is not one of them.
No signs, though, of credit stress. So let's broaden out in terms of hyperscalers, like tapping the debt markets and so on and so forth. Any of it that shows any signs of stress or strains when you look at these balance sheets?
What some see as stress in terms of borrowing money to build AI, I see as opportunity. And I think that's what the leaders of all these hyperscalers see as well.
Opportunity to buy their and own their debt and be part of this?
No.
What?
They're building the future. They're investing capital into cash flow generating assets. The problem is it takes a lot of time up front to build it before you start seeing the returns. So right now, all we're seeing is the spending. No one's actually seeing the returns so far. Again, I would argue that if you actually look at the first quarter prints for all of these names, whether it's Microsoft, Meta, Alphabet, they had all had record highs, and they're all guiding even higher, all with double-digit top-line growth. So I think there's a dichotomy between the equity markets and the credit markets. The credit markets are fine. We're actually hearing about a wall of worry, a dystopian world where we're all going to be walking around with robots and rocks. And quite frankly, I think that's news that sells, and I don't see it. The credit markets don't see it. And if these companies have more bonds to sell, there are buyers out there.
But to be fair, and Kunjan, come on in here, that part of the dystopian world is the promise of this technology actually succeeding. So to Robert's point, what would make you say, okay, we've gone from the place of spend, where these companies are spending money, to actually seeing the returns? What do you need to see in order to say we've gotten there?
I think we are seeing the return, is just like Robert mentioned, we are seeing a return from all of these names. Look at their earnings, look at their AI-driven earnings. In a lot of places, I know the data is too early, and you cannot still justify a token dollar spent to a dollar of revenue captured. But when you dig deeper and look at their key metrics, I mean, Salesforce also announced a new metric that they created to justify token usage to how an agentic task gets done. So we are seeing a lot of data points here, which is driving higher and higher revenue, driving higher and higher productivity for a lot of these companies that are spending money. But it will take time.
And, interestingly enough, we did get Salesforce earnings after the close. The stock's up about 3.5%. I mean, we're seeing some outperformance. The worries about the software space and so on and so forth, and forgive me, I only got about 25 seconds. Robert, any stress there? I mean, are there going to be some winners and losers?
I think down the credit curve in high yield land, there will be some stresses. But high-quality names like Salesforce, what did they announce yesterday? A $50 billion stock buyback. That does not show any stress in the credit markets. I think these markets continue to remain strong, and everything these companies are saying are actually pointing to that.
All right, we got to leave it there. Guys, thank you so much. Really appreciate it. Certainly one of the big important companies of our universe at